Today, I had a look at a very hyped project called Jupitor. What I found is mind-boggling. I already had a hunch that it was bad, but I could never have imagined how catastrophic it really is. Based on my findings, I gave up some of my own principles. This is one of my highest conviction plays ever. I advised my viewers to never short and also never use leverage. I threw both of these principles overboard after taking a close look at Jupitor. Keep in mind that I am not a financial advisor and that you should always do your own research. After we got the disclaimer out of the way, let me now present my findings. Let's talk about valuations first. Jupitor is insanely overpriced. First comparison was made with Uniswap, the far biggest, most established DEX. Jupitor is almost as much worth as Uni, looking at fully diluted market cap. Comparing with Curve, it is worth more both in terms of fully diluted market cap and also in terms of market cap based on circulating supply. It could also make sense to compare it to GMX, a perpetual future exchange, as they offer this service too. Again, Jupitor is valued at a lot more. As far as I understand, their docs are terrible, so please correct me if I'm wrong. They don't have their own exchange. For swaps, they are just aggregating other exchanges on Solana to facilitate trades on your behalf. So let's find a project to compare them to, who does the same. InstaDepp, one of the best in this field, maybe the best. Again, the valuation of Jupitor is way higher. Keep in mind, InstaDepp is a long-standing product with a good track record, and Jupitor is none of these. Not looking good so far for Jupitor, but it's getting worse. Let's talk about tokenomics. I couldn't find much, so I asked in their Discord. That's the reply. Why be bothered with such an unimportant thing anyways? What I found about tokenomics is this. Must be nice to get 50% of the tokens as the team, especially given the high valuation. On top of that, more airdrops will be coming. As you can see, only 13.5% of the tokens are circulating yet. More will be released soon, meaning that there will be a massive inflation putting even more pressure on the price on top of the already unjustified high valuation. Moving on to the utility of the token. Seems like there is none other than governance. At this point, it also doesn't seem that you can participate on the generated fees. This is a quote from their documentation. Obviously, that's also going to the team. Talking about the team, I wasn't able to find any information about these guys whatsoever. At the time of publishing, they also didn't reply to my questions regarding the team on their Discord. Other influencers are also concerned with this project. The price dumped 33% on the first day, unlike the bullish trend observed with almost all other token launches. This is a quote from the CryptoRank article.
Critics have raised concerns over the management of the JUP token launch, pointing to actions by the Jupitor team that deviate from standard practices in the crypto space. On X, Adam Cochran, a notable figure in the cryptocurrency analysis sphere, accused the Jupitor team of allocating a disproportionate share of JUP tokens to themselves.
It also could very well be the case that the team prematurely withdrew 30 million on the first day without any lockup, which is standard for legit projects. Before we continue, please like and consider subscribing if this was helpful so far and you don't want to miss future content. Also consider following on Twitter. I also make tons of content there. back to the video. Don't worry, there are even more red flags. Let's talk about the Perpetual Exchange. It's basically an exact copy of the GMX model, but at a way bigger valuation and way higher fees. At the time of recording, you would lose 70% of your capital if going short for a year. To my understanding, the borrow rate is not the funding rate normally used in perpetual futures. There, the side with the overlay pays the other one. No matter if short or long, you have to pay. Who the fuck is using this terrible, bad product if there are way better alternatives available? Providing liquidity might be profitable here to milk the stupid fools using this product. But keep in mind, there is a catch too. The GLP pool liquidity provider will face impermanent loss as the pool consists of 5 assets. On top of that, you only get 70% of the trading losses of the traders, but got to pay 100% of their winnings. This could turn out to be a very bad deal if a big whale makes a successful bet with up to 100% leverage to empty the whole pool at once. Also, no idea where the other 30% is going to. It's not in the docs, and I received no answer in the Discord. The white paper is non-existent, but is currently being drafted according to Discord. Makes sense to have a white paper multiple months after the project started. Listing tokens on Jupitor is also very strict. You need, for example, at least $250 of liquidity on each side. You heard right, $250, not 250k. You might assume that they are at least audited with that much volume on there. You are wrong according to their homepage. They are not audited, but at least undergoing an audit at the moment. Do what you want with these facts. I personally would sell all Jupitor tokens if I held any. On top of that, I would stay away from using the platform until they at least got audited. Let me know what you think after hearing all these facts. Thanks for watching. Please share it with someone who might also benefit. And if you liked this one, maybe this video is also for you.